And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's another beautiful day out there. And let's get right into it. A lot going on in the markets right now. And what do I have to say first is, as I research more and more into what's happening over in the UK, apparently their pension funds had a big margin call. We're talking to their bonds, the bonds and the pension funds over in the UK were taking losses up to 50%. They had a huge margin call, and what happened? The Bank of England stepped in and said, hey, guess what? We're going to go ahead and bail you guys out. It's just going to be a short-term thing. Don't worry. We're going to, in 2 weeks, we're going to turn off the printing press again. And here's what I would say. With things like that going on in the market right now, it's bad. It is not a good sign when the fourth largest economy in the world, the pension funds are going under, and the government's just willing to step out and say, who cares? Where the rest of the world is fiscally tightening, right? They're raising rates and pulling back on the stimulus. They're going, oh no, we're just going to stimulate again. Who cares about inflation? And that's just another mixed signal. So a lot of people are wondering, is the Shemitah still intact, right? And if you look back at prior cycles, September is typically when the month or when the correction starts. And that's just the beginning, right? So I would say, yes, the Shemitah signal is still intact, as funny as it sounds. And, as far as the stock market, we're down 2.7% on the NASDAQ, 1.8% on the S&P, and 1% on the Dow. Oddly enough, the Dow holding it up. Now, something odd to note here is the dollar is getting hammered pretty good. We had this little gap last night at 5 p.m., and of course the gap got filled. We're shooting right through it. Now, the question is, are we going to get a bounce here? And in fact, I think we have a little bit more downside on the dollar because of this signal right here on the 2-day time frame. Let's see if there's bearish divergence. No, not. In fact, so bottom line is I think the dollar could come down a little bit more. Typically, when the dollar goes down, stocks and Bitcoin go up. Bitcoin is holding on to a bit of a bounce here on the shorter term time frames. However, the 4-hour Stokes are about to cross down, and I do believe risk assets are going to take a hit over time. But here is the chart to rule them all right now, and that is the CMEs. And we did talk about this yesterday. We were looking for specifically a 4-hour closure above the 618 fib, coming in at 19,685. And what happened? We did not get that. We came right up to the 618. We rejected. We talked about a play yesterday of if we did get the 4-hour closure or even an hourly closure above 19.7, that, hey, we could put a stop loss here and expect to move back to the top side of the range at 20,200. That did not happen. And we are getting some typical price action. You come up to the 618, back down to the 236. And typically the next stop is going to be the top side or the 786 in this case. And that is if we can get a 4-hour back above the 382, which we're getting rejected at right now. So let me put this in simplest terms here. What I would be looking for is still a 4-hour closure above 19.7. Let's move this up to the wick here to be more conservative. A 4-hour closure above there or a 4-hour closure below here, below this wick. And that is very likely going to get us the next major move to the upside or to the downside. To the upside, I'd be looking for a move up to the 1618 right there. And if I flip it around here to the downside, I'd be looking for a move right here, 17,130. And this is on the shorter term time frames. What else did I want to say here about Bitcoin? Now, we've been speaking about this over and over and over, and I think repetition is a great thing. I'm going to bring it back to spot price action and say this. The 2-day Stokes today will cross up above 19,584. So as long as we are below 19,584 by the end of today, and that's 5 p.m. Pacific time, I would look for the downside to continue and that signal to remain in effect alongside the 5-day, which is going to remain down below 19,141. However, on the other side, so that'll bring us all the way into Monday or Tuesday next week, right? So 3 days after today would be, Monday night would be the next 5-day closure, and that's going to be a big factor. So what do I think happens? I mean, over the weekend, usually you get that sideways price action, not a lot happens, but I imagine people are going to digest this information as more and more people realize the UK is defaulting on our debt. They're printing more money. That means more inflation. In fact, Germany, which is the 5th largest economy, their inflation was projected to come in today at, I believe, 10.1%, and it came out higher than expected, I think 10.5 or 10.6. So Germany's inflation just came in hotter than expected. Again, the 5th largest economy in the world. And these problems are systemic, right? It's not just, oh, yeah, no big deal, like inflation in UK and Germany. No, the inflation is going to spread widespread below, to our shores, to put it lightly, at some point or another. And I imagine people in the stock market are going, well, maybe I should de-risk. Maybe I should, move to cash. Cash has been the strongest asset. I watched a great interview from 42 Macro yesterday. And, this Shmita signal may not play out, overnight in the next 30 days, in the next 60 days. We may be dealing with these systemic issues for the next year, 2 years, 3 years. It's not, guaranteed to happen overnight. But I will bring us back to the big harbinger of death and despair, and it was this 6-month bearish engulfing candle, not only on the NASDAQ, but on the S&P. This has only happened 3 other times in history. Once was in 1973, and I'm going to get rid of some of my fib charts here. Once was in 1973, if I can get this chart to come back. I marked them off here. 1973, 10-year bear market, and 1929, 20-year bear market. And here we are, and here we are. Same signal, same exact signal. I'm expecting stock market over time to come down to these levels. That is keeping my bearish bias. And until the weekly trend is averted on Bitcoin, and that is we make a higher high and a higher low on the weekly time frame, I will be looking at this as more or less to play out the downside move. What's more likely to happen over the weekend? Some more rangy price action as and maybe, in fact, maybe we bleed it out over the weekend and this 2-day signal does come to fruition. Really, the big line in the sand for me right now is the 17,500 level. If we can take that out on the daily time frame, that will be my signal to go ahead and kind of get ready for that downside move, which we are looking between 11.5 and 10.5. So we've been keeping a close eye on that for some time. Here's another thing telling me a big move is incoming. Is the daily BBWP is almost at extreme lows, and on CMEs, I believe it is pinned on the floor. So we are set to get a big move here. And if we close anywhere below 19,159, momentum will cross back to the downside. And there is no real bearish divergence. Actually, there is here one drive of hidden bearish divergence where the price is making a lower high and the RSI is making a higher high. It is not confirmed yet, though, and will not be confirmed without a daily closure actually below 18,390. And that would give us one drive of the hidden bearish divergence, which typically gives you the move to the bottom side of the range. So that's it for today, guys. I hope you have a blessed and highly favored day. And we'll be back with some more TA and Bitcoin updates. Oh, why don't we check in on Ethereum really quick? I'm a little bit rushed today because I got to go to a meeting here in about 15 minutes. But what am I looking at on Ethereum? Same thing. Low volatility on the daily time frame and any kind of a daily closure with momentum crossing back down. I do believe the downside move will be swift for Ethereum, and really, quite frankly, looking for Ethereum to come down to about $1,000. If this is going to happen, it's probably going to happen over the next week, I would say. And what else do I want to point out on Ethereum? The 2-day will, crossed up. Volatility is maxed out, though. And let's see if the same is on Ethereum CMEs. No, 2-day is still down. Will cross up above 1283. What about the 3-day is down? 5-day is down. Momentum is down. Volatility is at extreme low. So a very big move indeed to come for Ethereum. And what else do I want to say? I like ApeCoin for a short position. Why? Because it is held up rather strong while Bitcoin and Ethereum's been getting kicked in the teeth. And I just see a lot of downside available. If we revisit the lows of June, which the stock market's already done, Bitcoin is basically already done, and I don't see any reason why a NFT coin should be thriving in a risk-off environment. NFTs are high risk, so there is a fixed supply of these coins and maybe a bit, a few hodlers in a sense, but that one's looking good for some downside. XRP putting in a nice, and we'll cross down below 37 cents on the weekly time frame. If you do see that, I would say, definitely back to the bottom side of the range here. Right now, we're just testing the top side of the range, which we were calling for based on the 2-day time frame. In fact, as we got this closure, 2-day momentum is crossed to the downside, rejecting the bullish control zone, and will remain down below 52 cents today. Another one, Ethereum Classic, which I do believe will follow Ethereum, but just like it had more gains to the upside, it'll have more losses to the downside. And yeah, I'm going to wrap it up with that. Hope you guys have a blessed and highly favored day. Take care.